I'm Charlie White. I'm with the City of Harrisburg. I am the Director of Business Development. Welcome to First Steps to Starting Your Business. Today's session is a question and answer session, so we're really counting on the participants today to actually participate and ask some questions, some burning questions that you may have. Maybe you're already in business, maybe you're starting your business right now. But just any general questions that you have. There's some panel of experts that are up here today that will assist you in a number of topics as far as financing, initially starting your actual business. We don't have the insurance person here today, but there's an attorney. We also have a CPA that's here as well. So any questions that you have regarding your business or regarding starting your business, I implore you to ask them today. So typically how I begin, there's a couple handouts that we put on your table. And on here are some things that if you ever come to visit me in my office in downtown Harrisburg, I have this hanging on my door. I always ask myself, do I have talent? And a lot of times we don't figure or think that we have talent. So these 10 things are for folks that don't have talent, okay? These things are in your control, and these are things that you can make a difference and actually change about yourself. So being on time, that's very important when you're dealing with business, especially when you're going out and you're meeting with people, potential people about money, or potential people that are clients. Being on time and representing yourself is a great asset to have. Work ethic. If you put your work ethic into everything that you're doing, it will actually make a difference, and you just have to put a little more time in what you're concentrating on or your business plan. There's going to be a lot of people that will talk you out of doing business because it's not for them. So you have to be prepared and work with yourself as far as your work ethic to not be deterred by the naysayers. Effort. Effort is very important. Effort is something that you want to exude all the time when you're talking about your business. You can only speak to your business and what you experience and what your products are. Nobody else can actually explain your business better than you can. So you need to do all the research and put all the effort towards explaining your business so that you make that consistent effort when you're going out and talking to people. Body language. Typically people pick up on body language, not what you say, but what your mannerisms are and what you're actually doing, how you're looking, how you're receiving information. That's very important. So you need to work on your body language, especially when you're out talking to potential clients. Energy is important. There's going to be a lot of people that tell you you're not going to be able to do something. So you need that consistent energy, being around positive individuals. Prayer is another a thing that you actually going to need when you're going about this process, because your friends, your family, again, they won't help you until you make money, okay? That is the number one thing I can tell you today. Nobody will help you until you actually start making money. You'll get a lot of help then, because they'll say, oh, well, maybe your underwear has changed, or maybe your car has changed, or maybe you purchased something different that makes people think that you have money now. But they will not help you until they think that you are making money. So you can talk to your blue in the face, but you need to have that positive energy in yourself. Attitude is another thing that you can adjust. And these are all things that are in your control. We tend to focus on stuff that is outside of our control. But these 10 things you can control yourself. Being coachable. It's hard to receive feedback or even get questions sometime about your business if you're not really detailed in your explanation. So people will always question what your business is, and you have to be prepared to explain it. And if they're providing you with information that's good, then you do the additional steps of getting the research and just being coachable as far as receiving the information. All information isn't good, all information isn't correct, but just being coachable enough to receive that feedback is a positive. Doing extra. There's going to be a lot of late nights, a lot of sleepless nights, staying up to get your business going. Putting in that extra work, that extra time will allow you to get to accomplishments and goals that you made for yourself. Being prepared. Being prepared means having all of your information readily available. So if you're meeting with a financial person, having your financial information together, something that speaks to your business, to your products, to your service, things of that nature. Just being prepared. If you set up a meeting, having business cards together. If you're into construction, a capability statement is something that's always important to have. Just so you can get in a routine of actually meeting people and going through the process of explaining your business to them. So what I'm going to do, there's some people in the room today. I'm going to go around, let them introduce themselves, and we'll start with DJ.
Hello everybody, I'm DJ Polligan. I am with the PA Business One-Stop Shop with the Department of Community and Economic Development. I work with Julie and I'll let her explain more about the office. But I grew up around this area. I'm from the Stoughton area, born and raised. Went to Lebanon Valley College where I got my bachelor's and my MBA. I worked at the Department of Revenue for 4 years, so I have a lot of knowledge about the various taxes, state taxes. If you have questions about those, I can help you out, as well as going through the registration process of the PA 100, setting up your business structure, and all those good things. So.
Okay. And then my name is Julie Zorn. I'm also with the Business One-Stop Shop. We're the office that you would call if you're interested in starting a business and you really don't know where to start. Or perhaps all you want to do is register a business name and you don't know where to find the forms, or you want to question if that form is the correct one. You could be a little confused if you see a list of forms and you're not really sure which form you need to fill out. So we encourage you to call our office. We look forward to talking to you about your business, and then hopefully in the conclusion of that we can provide you with the resources that you are looking for. We have an email that we send out, and actually they sort of mimics the back of the flyer. There's step-by-step directions on how you would register your business. One of the first things, and I think folks forget, is you got to check with your municipality first to find out if this type of business would be allowed in your community or if it is zoned commercial, especially if you're going to have traffic in and out. If you don't have a freestanding brick and mortar and you're going to be operating a business out of your house, it's very important that you get a clear from the planning office of your local municipality. Following that, it's pretty easy. All you have to do is check the availability of your business name. If it's available, then you can log on to the Department of State's website, PIN file. You're going to choose your business structure, sole proprietor, LLC, corporation, what have you. You can register it right online. It takes all of a week or two. And that process will be done, and from there you would register or obtain an EIN number, and then you would also set up a tax account number with the Department of Revenue. So we look forward to your questions.
Wake up. Good morning, everyone. I'm Rick Foster, the Small Business Sales Manager for First National Bank in our capital region, which is basically New York north to Maryland south to Philadelphia east. Manage a team of business development officers. There are 7 of them, 7 of us, I should say. Basically anything loan exposure from $750,000 south would come through our area. That would be either conventional financing or with an SBA guarantee, which we may talk about today as well. I've been in banking for about 20 years. Yes, ma'am.
Can't hear you.
You can't hear me? Can you start over? I'm just kidding. Yeah, again, First National Bank sales manager. So I'm the guy with the checks. I can say that. So anything below 750, and we'll talk more about it here today.
Okay. My name is Brian Carter. I'm an attorney. I've been practicing law for about a dozen years now. and the focus of my practice is on business and real estate issues primarily. I'm the one you call when you have questions on, okay, what type of entity do I want to set up? Why do I want to go with that? What do I need to do as far as paperwork to get that done? And I can walk you through all that. What do I need when you have questions about contracts, about buying property, about any of those things? I'm the one you can call, and I can help you walk through that.
I'm going to stand up because I can't see you back there. And maybe it's better, louder. Dan Miller, I'm CPA, and we deal with taxes, accounting. Accounting systems are so important. Type of entity, and as a matter of fact, I know people call their lawyers, they should call their accountants too before they decide on an entity. There are tax consequences to that everybody ought to really understand and consider before they get into something and then they need to want to change it or get out, or not be too hasty to get in. But I'm here to answer many questions, or all your questions. I've had dealt with hundreds of businesses over the years, many more years than he has, so give me a good question.
Good morning, my name is Ken Hammaker. I work with Community First Fund. So we're an alternative to traditional banking. We're a non-profit institution that provides funding and financing only on the business side. So we only do business loans. But how we're a little bit different from the banks is that because we're a non-profit, we're not as heavily regulated. So we're able to a lot of times get loans through startups, things that are a little bit more on the risky end, that traditional banks and credit unions aren't quite able to do because of the regulations that are imposed on them. So oftentimes we work very closely with the banks because you still need a banking relationship. All we do are the business loans. We don't take deposits. We don't do credit cards or anything like that. So you want to still have that solid banking relationship. But often we're able to assist where the banks maybe aren't quite comfortable to do that deal. I cover Dauphin, Cumberland, Franklin, and Perry counties, but our organization continues east all the way to Philadelphia and up to Allentown. And again, what I'm here to do is talk about loans and what types of information you would need in order to come to us to put a package together. And our emphasis is again working with businesses that maybe can't get the traditional banking, but also we work a lot with women-owned businesses and minority-owned businesses, especially those that are in lower-income communities like the city of Harrisburg.
All right, thank you. There's a couple other people here too. Linda.
Okay, so my name is Linda Grove, and I'm with the Small Business Development Centers. All of our consulting is free. However, we advise you on what to do, and then you get to do it all. So the joy of self-employment means 24/7, it's on you. There's no team, there's just me. I was self-employed for over 20 years, sold all my businesses, so then I was unemployed, and now I get to help others. We are funded by the Small Business Administration to give good advice. This is your team here. All of these people, your accountant, your attorney, your city contact, municipality contact, those people all have advice that you need to hear, but ultimately, we don't know what your dream is. Is it to do good? Is it to sit home and make $1 million, which then that's probably not self-employment? Do you want 200 employees because you want to create jobs? Do you want to help children? There's a million different goals with running your own business, and we want to help you figure out what your dream is. We're funded by the SBA, and I'm going to hand this off to my colleague and funder, Solomon Wheeler, who's here. He's our SBA rep, and you can let us know what you have to say today, Solomon.
Thanks, Linda. So good morning, everyone. My name is Solomon Wheeler. I'm the branch manager for the U.S. Small Business Administration. So I'm kind of the representative for the federal government out here in central PA. I cover 13 counties, but really there are just three things. Stand over here. Just three things that the SBA does. We provide funding to great organizations like Kutztown Small Business Development Center. We work with banks like First National Bank, and we work with micro lenders to help them say yes. So the idea is that the federal government uses funding to ensure that Americans have an opportunity to pursue small businesses. And then the third thing, and I'll end here, if you are interested in selling to the federal government, I would encourage you to let Linda know about that. There's tremendous opportunities through government contracting. We spend $500 billion a year on goods and services. Very few entities on the planet spend that much money on goods and services. About 23% of that is mandated for small business. So I would encourage you to take a look at that as part of your strategy for growth. And I'll have business cards, and my information is on one of the sheets that Linda handed out. Thanks very much.
And Lord.
Good morning, everybody, or afternoon at this point. I'm Lori Kyler, and I manage the office for First National Bank, located at Second and Walnut. So frequently, you might come in and talk with me, then I will connect you to these partners as warranted. This is your team. I thank the city, I think, Charlie, thank you for coordinating this, and kind of spearheading it, and keeping us all on track.
Wonderful. Now, how many people in here have obtained the EIN number? Okay, good. So, if we could talk a little bit about that process as far as going through and getting EIN number, also verifying your business name. How many people have a business name? Okay, that's good. So there's a process that you have to go through as far as searching for your name to see if it's available in the state to utilize. Part of that process is usually down to the characters that you're putting in the name. It could be numbers that you're adding, but you need to check to make sure that your name is available, and that is through the State Department website. So if you could talk just a little bit more about at least that process for me.
All of those who registered their business name, did anybody contact our office first to get guidance? Or did you just research it on your own? What did you Google? How to register a name, or?
I actually went through my lawyer. He helped me through that process. I wasn't too sure.
Good move.
Why is that like the first time after attorney set everything up for you? Usually the best results.
If you
Go ahead. No, go ahead.
If you don't have an attorney, what you can do, I mean, we always recommend, so when you go to register for an EIN, you have to have your name, so you have to know what name you want to register with. And you also have to know what your business structure is going to be, because you have to choose that when you go to register your EIN. So those are two things you have to think about when you go to register your EIN. And we don't recommend a business structure. We would defer to the attorney or the CPA. You can go to the SBDC, you can contact the SBA. All these areas will be able to help you determine what type of business structure is good for your business. And once you have those two pieces of information, then you can go into the IRS website. Very easy to register online. You can get an EIN in about 10 minutes. That's all it takes. So
Go ahead. Yes. Go ahead. Yeah.
Just for clarity, is business entity and business structure the same thing?
More or less.
Okay. Could you just give a quick list of what types of things we're thinking about when you say that?
So when you have a business, if you are a single individual, you're out doing business, you are a sole proprietor. If you bring on your buddy Jim to help you out, suddenly you're a partnership. There's nothing you need to do to register, you can just do that to have that type of business. If you wanted to register with the state, your business, you really have three options. Two of them are generally the ones you're going to come across. One is a corporation, the other one's a limited liability company. And those two require filing paperwork with the state. And it's a fairly simple process if you know what you're doing. And it doesn't really take that long. Once you can file it electronically, and once you file electronically, it's taken the state about 5 to 7 days to confirm that and get back to you. Which type of entity you want to use, that's deeper. The actual structure of it, that's a deeper question. And that's going to depend on a number of factors. One is, what are you doing? What kind of business are you? What kind of protections are you looking for from the business? A lot of those questions, though, that are going to come up, Dan's going to be able to answer because those are more tax related. In my experience, the type of entity you select, whether it be a corporation or an LLC, doesn't really matter in most instances. An LLC is a lot easier to operate. More so, it's going to be driven by your tax considerations. You want to touch on that a little bit, Dan?
Yeah, I mean, and, I think a lot of people in my experience who get all excited about starting a business think they can't have a business until they're incorporated, and that would be a corporation necessarily. And they go out and they do that before they've done anything else. And I often see that as a mistake. Because actually there's the corporation, there's the LLC, and there is the sole proprietorship. And that's, that's the first thing sort of you mentioned. You can just start your business as you, and that's a sole proprietor. And as a matter of fact, the tax laws just changed, like in December of 2017. So that there's a big advantage to being a sole proprietor now. There's something called QBI, Qualified Business Income. I don't know if anybody's heard of that yet. It's probably not out there too much. But let's say you are a sole proprietor and you made $50,000 last year and you report that on your tax return on a Schedule C. And the nice thing about a sole proprietor is that there's not a separate entity. And I think this is something people don't always understand. There's me, I'm Dan Miller, but if I form this company over here, and Dan Miller Incorporated, there's actually two things now. There's me, but I also have this corporation. And that has to file a tax return, and I have to file a tax return. And that has a set of rules, and so it's not all the same thing. But anyway, as a sole proprietor, let's say I made $50,000. I file that just on my personal tax return on a Schedule C. This year, or for 2018, there's qualified business income. And that means that of that $50,000, I get to deduct 20% of that on my tax return. So I would show maybe $50,000 of income, but then I get a $10,000 deduction because of the new tax law, and so I'm only paying tax on $40,000. So that's really an important item. That can also happen with a sole proprietor or a single member LLC. I mean, it can happen with partnerships. In a corporation, it doesn't really work that way. So because the corporation, generally for small businesses such as what we've got here and most people, you don't want to leave income in your corporation because to get that money out, there'd be double taxation. And I guess I could go into this.
Not too deep, but
maybe.
No.
But it's a big consideration, and so anyway, there are a lot of tax consequences on how this all works, and so you want to really understand those things before you get into a situation and say, oh, I didn't realize that, and now I'm paying more tax, or I have this other
So Dan, what's the difference like with doing a DBA, doing business as? Is that?
I think that's just some little technical thing. I don't really know about that.
So doing business as is oftentimes you are your own sole proprietor. You are your own business, but you're using a separate name. So you're doing business. It might be Dan Miller starting up his own separate tax company, but he doesn't want to put it in his name, listed as his own name and advertise in his own name. So he might just say,
AAA tax.
AAA Tax Service. You can do that. You can register that name with the state. You don't have to, but you can.
Is that as a sole proprietor?
That is a sole proprietor. That's somebody who's just...
So you can be a DBA and a sole proprietor,
Yes.
have a DBA and an LLC, or
You can, if you're going to use an LLC, there are some different rules that kind of kick into play as far as how you go about holding yourself out to the public. So you might be AAA Tax Service LLC doing business as just AAA Tax Service. Question in the back?
Yeah, it's about LLC. Say you have an LLC and you put a property under the LLC.
Okay.
And you sell the property under the LLC.
Okay.
How are the taxes? What do you do with the profit? Because you have to file taxes, right?
Well, if you're a single member, and this is an important part too. If you're a single member LLC, and that means that you're the only person in that LLC.
You're the only owner.
Yeah, owner. That's correct. When you're that, then you're treated exactly as if you're a sole proprietor, and that means
For tax purposes.
For tax purposes. Okay. It's good to have that. Correct.
attorney and a CPA. They need to cover everything.
And so that means for tax purposes, you file just as you on your own personal tax return on a Schedule C. So that's how that works. What?
Well, what if you're disabled?
If you're disabled?
Yeah, I mean, you're in the business, you have an LLC, you're disabled. You normally don't file taxes. And I guess disabled people.
Everybody needs to file taxes.
Everyone make sure I understand.
I'm just throwing that out there.
Small disclaimer.
If you don't file taxes, the tax man will catch up to you eventually.
Can I hop in on that? And this is the thing I see most, or I've seen most in my career. People get employees, that's great, their business is growing, they get employees, and they don't file their payroll taxes. And here's what happens. You know, payroll taxes are due maybe at the end of the month or at the end of the quarter, depending on how big your payroll is, okay? And so you pay your employees, but you withhold some of that money because that's the federal withholding, the Social Security, et cetera, that you need to pay to the government. So at the end of the month comes, right, and you need to pay $1,000 to make your deposit. You make a deposit to the government. Well, guess what? You look in your checking account, and you have $1,000 or $1,200, and you think, oh, I need that money for this or that, and I don't pay my taxes. And the next day, what happens? Nothing happens. Nobody's coming after you. And in 6 months, nobody comes after you because they've got we're all small fish in a big, big pool. But eventually, they come after you. And you've got a big tax bill, you've got penalties, you've got interest on top of that, and that is the thing that has shut down more businesses, in my view, than anything else. So my point is, if you get employees, you've got to make sure you pay your payroll taxes. That's tremendously important.
There was a business in the area here who, I knew the owner, he was not a client of mine, but I knew the owner. Business was doing 8 figures of revenue a year, so north of $10 million. He didn't pay his employee taxes to the tune of about $7 million. He got an all-expense paid vacation for 3 years in the federal penitentiary. And still has to pay back that $7 million. Business is gone. Ruined dozens and dozens of people's lives because of his mistake. So it doesn't just affect you if you don't do that. It'll affect your family, it'll affect your employees, and who knows who else it'll affect. So if you're going to have employees, talk to Dan. Get an accountant in there to help you do it right.
Yeah, I just have a question. As far as, because I don't have any employees and I'm looking at starting that, what does that look like? Just say, just take an even number and say, I'm paying this person so much per hour. What does it look like? Like, how much do you need to put aside for your payroll tax and for or is this something the accountant would figure out for you ahead of time and say, like, because my accountant now tells me, okay, pay like this much in quarterly for me. Would the accountant help with that as well? I guess I'm just looking at, like, what is the overall cost going to look like to pay someone and then also pay these taxes as well as workers' comp?
Yeah, that's a great question. And generally it's about, I'd say, add 10% on. So if you're going to pay somebody $10, another $1 for, what all you're paying is the Social Security, half of that, and you're paying half of the Medicare, and then you have unemployment compensation, which that varies, so it's hard to say. Plus you have workers' comp insurance, so you would have that.
George, I'd almost go up to 20% to cover all bases because of the cost of the workers' comp insurance. So I buffer a little high, because if you have that little extra at the end of the next half of the year, you're not going to be sad. But if you're short, you're always surprised.
You also have state withholding, and you also have local withholding as well.
But you're not paying those. Those are withholding.
Right, yeah, they come out here.
So whenever if you're going to pay somebody $10, think at least an extra 10%. If you want to be comfortable, I guess, go. And it does depend on your type of, like in a lot of professional businesses, that workers' comp's very low. If you're in, I think a landscaping business or something, that might be a lot higher. So you do have to get some knowledge there. But I want to mention one other thing. Not only payroll taxes, this woman mentioned, she's making payments quarterly. This is another thing I really would like people to drill into their head, is I see this. Somebody goes out and they start a business and they're flying along and they're doing all this, and they left their job, okay? And at their job, their taxes are being withheld, so they want to go do their taxes. A lot of taxes already paid, so they don't maybe owe much at the end of the year. When you start your own business, nobody's withholding taxes. You're required, or you're supposed to make quarterly estimated payments. And so then if you don't make those, and I see this, they get at the end of the year, oh, they've had a successful year, they made $50,000, but they've paid nothing in. And now they owe, and not only do they owe the income tax on that $50,000, this is the other big piece, is Social Security or self-employment tax. Right now, you're paying, let's say 7.5%, the employer pays 7.5%. When you go on your own, you're paying it all. It's going to be basically like 15%, in addition to the federal income tax. So you really want to make sure you're paying your quarterly taxes and you have an idea of what they would be. And you generally estimate those based on what your prior year income was. So that's how you do that.
Yes, ma'am.
I just want to make sure we're okay. Is this how it's going to be set? We're going to ask questions. It's like free. Okay. This question's for Dan. You're like a minute out. So it's a tax question. I filed with the state at the end of December 2018 because I kind of wanted to brush things up to get started for this year. Of course, I didn't collect or bring any income in through my business. Am I still required then to actually file taxes for my business for 2018?
So when you say you filed with the state, what do you mean?
So I registered with the state.
So you set up an LLC or something like that?
LLC, got the EIN for the federal government, and then registered my business with the Commonwealth.
Excuse me, did you also file with the Department of Revenue? Okay.
So now does that mean, even if you didn't make any money, say I was a year for full business, I would assume that I would have to file taxes for that year, even if I didn't bring in income?
You're a single member LLC?
Yes.
Yeah, I mean, that goes on your 1040. Frankly, I would probably just ignore that if you had no income. I mean, if there's nothing, you could file a Schedule C with nothing on it, but I don't know I don't know if that's data.
I've had clients who have had their LLC, they've operated, and then they go to shut down. They want to end the business for whatever reason. That takes a lot of time in Pennsylvania, unfortunately. You're mostly waiting for the Department of Revenue to get the certificate back to you, and they always say it takes a few months. Every time I've done it, it's taken well over a year to get it. But they file what's called a final return. And so they're still technically operating a business. It's still existing. But they're not doing anything with it. Because they're not doing anything with it, they don't file a tax return on that. So, if you just started up and there's nothing to report, I don't know if I'd really go about it.
It really depends on how the business is structured.
You
If you're a
guys
single
talk about
business,
We're coming to get you now.
Another question, because we were talking mostly about employees, and that's a lot. And like 1090, would that be like the contractor or 1099?
1099.
So in that case, do you still have to, outside of giving them the forms with the contractor or subcontractor to fill out that document themselves, would you have any responsibility outside of that, like with filing it out?
Well, I don't know, hopefully there's somebody from the state here on that. You have to be very careful with 1099. Okay, 1099 is, let's say you hire somebody who does a lot of other different things. Let's say a cleaning agency. Okay, somebody's going to come in and clean your business, and this person has a cleaning business, and they come in once a month or whatever, and at the end of the year they've earned $10,000, and so you fill out what's called a 1099 miscellaneous, and these you have to report these to the federal government, and you have to give that to your independent contractors. That's fine. There's no problem there. But if the person has to be a truly independent contractor as opposed to an employee. And it's somewhat of a gray area in between there, so you have to be careful that you just can't hire somebody and then give them a 1099 when in reality they're an employee. And then you really, if it is an employee, then you should be withholding taxes and doing all of that as opposed to a true independent contractor that you're giving a 1099 to. So it's not clear cut.
One of the reasons it's such a gray area is the IRS has their criteria they look at to see if somebody is truly an independent contractor or should be considered an employee. So the IRS has theirs. Department of Revenue has their own in Pennsylvania. The Department of Labor and Industry in Pennsylvania has a separate one. It depends on the industry you're in, what you're doing. So it is very, very particular. People get tripped up all the time by trying to say, oh, he's an independent contractor. Chances are probably not. And so that's where you really want to call up your attorney and say, this is what I'm doing. Is this person an independent contractor under the law or not?
So essentially, they would have to have their own business, they would have to have a business in order to be a contractor?
No. I mean, you can be a sole proprietor and be an independent contractor.
Okay.
But you should go out, get legal advice before you start issuing out 1099s to make sure the person actually is an independent contractor. Because if they're not, you're on the hook for all those back taxes that are owed, and the penalties, and everything else.
There's a good resource on the IRS website for that. That'll explain the difference. And a lot of it has to do with control, whether you control what they do, how they're paid, whether they work independently of your oversight. So there's a lot of factors that go into it.
Yes, sir. So if the 1099 that you're going to issue to a person checks out properly, this will cut the tax liability of that company, that employer. Correct? It is a good tool to use if that person is in fact a sole proprietor for the 1099 miscellaneous. Would you say that's fair?
Well, any legitimate expense will reduce your income, if that's sort of the question. And a 1099, on a sole proprietor can be definitely a legitimate expense. So, and you don't have to give everybody a 1099. There's rules around that. But a 1099 doesn't legitimize an expense necessarily. But any expense that's related to the business, that's why you need a good accounting system. That just maybe can flow into something else. But you really need a good accounting system so you're capturing all of your income, all of your expenses. You know everything that's going on, and you're going to get the right information, not only for you to run your business, but also for tax purposes.
It's lost.
Yeah, what you're talking about, in order to clarify your subcontractor, your contractor, you would have to have your insurance paper, right? Mr. Enders. Which one's Mr. Enders?
He's not here today.
He's not here today.
Yeah,
He would jump on
whether
board.
somebody's an employee or an independent contractor will impact your insurance coverages that you need as well.
Well, no, the question was, if you're going to hire a subcontractor, the first thing you would ask for is their insurance.
You should want to see a certificate of insurance from them.
That would state the name of their company and their EIN number.
If they have an EIN. There's no requirement that you have an EIN. If you're a sole proprietor, you don't have to get one. I recommend you do, because if you don't, the other identifying number you need to give out to people would be your social security number, which you probably don't want to do. An EIN is very, very easy to get. Additionally, if you go to Rick to open a banking relationship, he's probably going to want that EIN as well to be able to open up the accounts and everything. And so it's easier just up front, go get the EIN. It's easy. There's no direct cost for the EIN. If anybody wants to charge you saying, hey, I have to pay $1,000 to get you the EIN, they're lying.
Yeah, there's a lot of online services that are out there. It's a lot cheaper to do it yourself or go through the process through an attorney because those services a lot of times don't understand how you want to set up your business. They're doing it real quick. So the information that you're putting on there, if you're paying $500 to $1,000 to try to set up your business, there's a lot of free information out here that you can obtain before you go through that process. Yes, ma'am?
Is the EIN number that you get with the state the same as the one you get with the federal government? You just have one EIN number?
Well, the state's not giving EIN number. You're obtaining that from the federal government.
And then yes, you use that EIN with your state obligations as well.
So if we could go ahead, sir.
Is the EIN specific to the business? So if you had an EIN for a business before, would you be getting a different one for a new business?
Yes. Yep. You'll have a different EIN for every business that you have.
And the EIN is free to obtain. Now, as far as the registration through the state, there are some fees that are associated with actually registering with the state.
Which would be $70 for a fictitious name and $125 for an LLC. That's it. Everything else would be free.
That's not exactly correct. If you are...
Oh, okay.
On the EIN.
I'm sorry, those fees are fun, right? But on the EIN, if you're a sole proprietor, and let's say, I have a hair business, and then I decide I want to do landscaping, but I'm still a sole proprietor, you only have one EIN. So as a sole proprietor, once you go online and you get that EIN, that's your sole proprietor number for whatever different businesses
And
you have.
But if you have LLCs,
Yes, there you go.
So I've had a client who was investigating a business opportunity down in South Carolina. He's up here. He had us go ahead, set up an LLC for him, which he's gonna, if he moved forward with this, that's how he's gonna take his ownership in that business opportunity in South Carolina. We set up the LLC, we got the EIN. Ultimately, he decided not to pursue that business opportunity. Another business opportunity up in this area came along where it was gonna be like a quick lube shop. He was going to use that same LLC and that same EIN, which he could do because that was still within that business. But if you go to set up a new LLC, you cannot transfer that EIN to the other LLC.
On number 3 on the business registration checklist, it says apply for an FEIN, a federal, so is it the same thing?
Yes.
Okay.
And it's not the same as the state number.
Okay.
When you register an LLC, you do have to decide like what type of industry you're in. So does that have to transfer over?
So-
Or you have to change that on your current?
When you go to file for your paperwork, whether it's LLC, corporation, or anything like that, with the state, one of the other documents that's required, there's no fee associated with it, but it's another required document. It's called the docketing statement. On that docketing statement, it's going to ask you, what kind of business are you doing? You have to be somewhat specific. My guess is they would reject it if you just put construction. If you put home remodeling, that would probably go. When you file your paperwork to get the EIN, again, you need to put in what type of business you're going to be having. And if you change, you don't need to tell the IRS that. You don't need to go back and tell the state, hey, I was going to do landscaping, now I'm going to do real estate with this business. I think one of the reasons they want that is for internal tracking and kind of see what people are looking at doing and things. But there's no obligation to go back and say, by the way, I changed that.
Question for you, with an S corp, say you do own the landscaping company, you want to do the real estate venture also, can that all still be under that sort of parent company, or do you have to?
You can. There's nothing that says your business is restricted to this type of business, and to do anything else, you got to open up a separate business. Let's say you have a landscape company. Let's say you wanted to open up a bakery. You could do that under the same corporation if you wanted to. I wouldn't recommend you do that, but you can.
Do all the same sort of statutes apply to both then? For instance, liabilities and things of that nature, shares and all that?
So Pennsylvania has the business corporation law, or the business association law. That applies to all businesses. There are provisions in that apply to specific types of businesses. So there are provisions on nonprofits, there are provisions on corporations and partnerships and limited liability companies. But most of those are specific to that type of business entity. It doesn't matter what you're doing within that business. There are other laws that apply. So if you're in construction, if you're going to be being a hairstylist or any other thing that's licensed, you have to get the license from the state. You have to register with the state and do those things, and other laws and regulations will apply to you then as well.
Funding, like if you're starting a business, and what qualifies you? I mean, you have no money, you want to go into your own business, you have your business plan. How do you qualify for like government used to have, what they call grants. Is that, who's with this thing?
There's really, yeah, I'm just trying to think how to answer this. We do have grants that are administered out of DCED, that's our agency. But it's usually not for startups. That's really hard. They fall in the, go ahead, Linda.
Oh, no, I was going to jump in here.
Yes.
There's a listing on the state website
Yes.
for legitimate grants in the state of PA.
Yes.
However, what, to Julie's point is, they're normally for some sort of altruistic purpose
Yes.
or a nonprofit, meaning in 10 years of consulting, I've seen 2 grants that companies got. One was for Main Street beautification. They got money for a sign. And one was for an organic berry that the federal government was looking for. There's a long list in the federal government. There are some contests that will give money to startups. I have a few pitch type competitions coming up. But I will, if anyone that replies to my follow-up email on Monday, if you reply, I want to know about a food startup, or I want to know about grants and loans, I can send you the legitimate links. Please don't click on anything that says, you know, the free money is here, or the grant is here. I've always seen that to be a myth. Solomon, one of Solomon's colleagues from the SBA says that grants are kind of like Santa Claus. We all talk about them. We don't ever see them. How many, you've got some grants in your pocket?
Yeah, I agree with what Linda's saying. With federal government, we get that call all the time. Where's all the free money? I saw someone on late night television talk about free money. So generally speaking, that's not available unless it's, you know, altruistic or you're a nonprofit organization with a mission. From a federal standpoint, the website for grants would be grants.gov. But typically, you are a nonprofit that's fulfilling a mission where there's a gap, right, in services.
So you would be able to apply for that type of grant. Go ahead.
Manufacturing. I thought that the federal government was grants for, like, if you start your manufacturing, clothing or because they're trying to bring manufacturing.
So I'll answer that this way. There are some trade associations and manufacturing associations that certainly are encouraging investment in specific areas. But I would say, generally speaking, there are not grants available for that. You are still going to have to come to the table with some type of money to invest.
Yes, sir.
Enterprise zones. Are there still enterprise zones where you qualify if your business is in like that general area, you qualify for money?
As far as I know, I would have to check to see, but as far as I know, there are still some enterprise.
A lot of those zones are tax credits, so you get like either tax-free, income tax, social sales tax, or you get credits for if you hire employees. So those are a lot of those zones are.
What would gear towards incentives.
Yeah.
As far as it's not necessarily somebody giving you money. It's more incentive based. Like you're providing a service and there's a lack of employment, so you're bringing in 15 to 20 employers. So they may cut back on maybe the taxes that you have to pay.
So that's still like.
There's a Keystone Opportunity Zone in Harrisburg, and in that zone, I don't think you have to pay real estate taxes. I think you don't have to pay state tax. You don't have to pay local tax. You have to know where that zone is, and you have to qualify and be in it. But
17th Street?
What I'm thinking is
there's actually a map
look at the
on
map.
Creed's website that shows
But
the.
is it up by Hamilton Health Center on 17th Street? Same thing?
I think it's around Market Street. And
Yeah, I think there
Cameron
is
Street.
part of that parcel around 17th, but the Hamilton House is in a KOZ. Part of it is, I think over, if I'm not mistaken, like behind Piccolo's, and then coming into Hamilton, there's a used to be like some old cars in that particular lot, but I think some of that is in the KOZ.
Where did that money come from up on 3rd Street? The governor gave a whole bunch of money to that guy where the kitchen or the old PAL building. Where did that money come from? That's a business. And now I think it might be going to bankruptcy or something like that.
And that was with the state?
Yeah, state money, you paid for it, taxpayer money.
I mean, you can do freedom of information requests through DCED to find out information about the various tax programs, or the various
It wasn't
loans.
just like a little bit of money, it was big money.
Right.
And you can always visit business.pa.gov, contact us form, just, you know, submit your question, and that way we can actually find the information truly that's what you are looking for. So if you're interested in KOZs or any type of grant funding opportunities, if you give me more detail, then I definitely can get you the resources. No, actually, we moved over to the Commonwealth Keystone Building. We're up on the 4th floor.
Yes, sir, I'm connected. Yes, sir. Yes.
Could you talk a little bit about write-offs? Because it's such a gray area in that aspect. And I know sometimes people have gotten into a lot of trouble because they feel as though they want to write something off, but actually they're not able to write something off. And businesses versus entrepreneurs, is it different or is it the same?
The IRS website has a really good section on that, on the Schedule C, and what you can claim and what you can't. Pretty much any time you inject a penny into that business, that could be a potential deduction.
And you want to speak with your CPA.
Yes, of course you do.
Or can.
Although,
I
like, you
know.
know, I have a client, he goes to lunch every day and puts it on his credit card, and then that's sort of flowing through. Well, that's not a legitimate
No.
expense, okay? Yeah, so you, and the same with, you know, one interesting thing is when you're, as far as mileage, if you are an entrepreneur and have your own business, you know, when you leave your house and go to that, whatever, you know, a client or your business or that job, all of that mileage would be deductible. As opposed to if you're an employee and when you go from home to work and back, that's called commuting and that's not deductible. So there are some differences there. I mean, but it's, you know, maybe go on the website. It has to be a legitimate expense. It can't, you know, I know that people say, oh, I'm going to take a trip to Miami and I'm going to visit this landscape company and I'm going to write that off. Well, no, that's not a legitimate business expense.
It
Now,
explains it well on IRS,
Right, and I'm sure,
definitely.
yeah, if you like to read about taxes, then, you know, the instruction booklets for the actual tax returns that you file. So for the PA-40 instruction, which is the state return, you can get a lot of good information in there about what expenses you can and can't deduct, and so there. And then the IRS 1040 Schedule C return probably has a lot of information in there, the instructions for that.
Where does that information reside?
And you can probably get it online, so you can go to revenue.pa.gov to get all the information about state taxes, and then irs.gov. And I would recommend using the search function on the website just to, you know, search some keywords and usually get good results.
So to kind of bring it back to money, I know there may be some people that are interested in financing in here. If we could just kind of talk about at least what First National provides as far as funding for small businesses, and then if you could talk to the aspect of if you don't particularly qualify for a loan from First National, where Community First Fund would come into play in that equation.
Sure, it's a loaded question. I was going to say to you back there that I'm cutting checks, so it sounded like you were talking about equity, but maybe it would be more funding on the loan side of the house. So First National Bank, we actually also do SBA loans, which is essentially a bank loan with a government guarantee, which means that if you default on the loan, then we're going to go to the SBA to get some of that money back. So that's the main difference. With that, you're going to pay typically higher fees and higher rates. So from my standpoint, whether you're in business or a startup, that kind of dictates the direction you would go with respect to the loan, whether it be myself or with Community First Fund. It is tough to get money, I'll be honest with you up front, because that's kind of the big question. I always say it's the family, friends, and fools network first and foremost. You're going to talk to the people that you know, so you've got to come to the table with some type of equity. But in the absence of that, you have to have a good business plan, quite frankly, and a good pro forma, which would be, as Dan mentioned, kind of your income and your expenses, and then what's left. So what's left is what you're going to use to pay me. When you come to, go ahead.
When you say equity, say for instance I'm starting my own property management business, and I own several different properties with no mortgages. Could I use that as my collateral for my business? to
Maybe.
get a loan?
It depends. In the banking industry, the banks took a bath on a lot of investment real estate, to be honest with you. So what was happening was folks were flipping properties, using one property to buy another. And that's where it got a little herky-jerky. The banks preferred, in your case, to do one loan against one property. What was happening is you take 3 properties that were free and clear, you'd max out the equity and you use that to go do whatever. Banks kind of want to have oversight over what you're doing with it. So the answer to your question is yes, you can. In your case, if you're doing a property management company, as opposed to pulling equity out to do something else, it would be a better case for you. So from a banking standpoint, I'm not telling you how to do it, but you get one chance to ring that bell. You can't change your story after you come in. So make sure that you have discussion with whomever, whether it's myself or another bank. I always say banking is essential, but banks are not. But industry-wide, you got to make sure that your story is concise. You can't change it after the fact. So before you kind of go forward to submit a loan, just have a discussion with your banker. If you've got an existing business and you've got historical numbers, that helps. But even if you don't, and I'm sure Solomon would say, and Ken as well, that business plan with the pro forma, with your income and expenses, and then what's left is what's key. And make sure that you have something left, because if there's nothing left, then you can't pay me.
Typically, when you're looking at loans, I know people are apprehensive about credit scores and things of that nature. What's a kind of a range that one, the bank would consider an application, and then two, if they're not in that range, some other documents or some other forms that they may have that you would consider outside of their credit score?
Sure. That's a great question, actually. And that's always the biggest concern that people have. Well, I don't have good enough credit. I get that. But there's ways around. We actually financed the daycare in the Carlisle area where the guarantor, the primary owner of the daycare, had a credit score of 580. That's low. And that's typically to get you an auto decline. Banks typically look at around 660 or above. That's that watermark that you'll say if it's above that, then it's okay. If it's below, because they'll look at the propensity for you to actually default or pay the loan. That said, you can have a credit score that's lower. We had another, there was a restaurant out Union Deposit. The credit score was in the 590s. But there were reasons for that. There were delinquencies in the past. There were things with co-borrowing, with the son, with the loans. As long as you have a good story, quite frankly, around that, then it's something you can mitigate and get around. There's the 5 C's of credit. The main C of the 5 C's of credit is character, which would be kind of the credit score and the story behind that. So I would say never let your credit score discourage you from credit. That might be the start of the conversation, to be honest with you.
Yes, sir.
On that historical there, I'm trying to get dormant for a while and then I'll pick back up in a few years. So a lot of my balance sheets have been pretty much zero out. Is there a look back on historical, like what the potential is to regain? I mean, I'll have assets remaining, but a lot of the stuff I'm selling off, or what's your thoughts on that?
Sure. Well, with the bank, typically, well, most anyway, some banks are collateral lenders, which means if you default, they'll take your stuff. We're not that bank. Some are. The cash flow is the key, quite frankly. Again, it's the income, less expense, and what's left. What's left is key. So it's not so much the assets in that case, just be to take a look at what you've got and what you're projecting as far as contracts, things of that nature, and what the net income is going to be. Because I've talked to businesses that'll say, I'm going to do $1 million in revenue. Well, that's great. But if your expenses are 1.1, that's not so great. So really it's about what's left. It's the income as opposed to the assets. In lending, collateral is typically the least important factor we look at, and that's if there's an issue with collateral, that's when we may go to the SBA to try to get a guarantee to mitigate that risk.
Now outside of what Richard mentioned here, Ken, is there anything that you can add that maybe Community First Fund provides other than First National Bank?
Yeah, so I mean, as I mentioned at the beginning, Community First Fund being a nonprofit, we have a little bit more flexibility when it comes to not being quite as heavily regulated. So, but you know, kind of the same things that we're discussing. I mean, we still want to see a business plan, and we want to make sure that you have a good understanding of that business, and you're not coming to us saying, well, how much can I borrow? You know, we want you to tell us what you think you need. So, I mean, that's kind of all part of that business plan, so we have that good understanding of that you know what you're looking for. So, you know, same thing like, for example, if you've been a hairstylist for 5 years and you want to then start up your own business, that's great. If you you've been a hairstylist for 5 years and you come to us and you want to start up a Subway. Now, all of a sudden, we're like, okay, wait a minute, do you have any experience in the food industry? Do you have any experience dealing with the supplier? So, making sure that we have a solid understanding as to what you're looking for and that we believe you have a solid understanding. Now, I mean, with regards to having money down, even our organization, we still need to see, the term we use is you got to have some skin in the game. A financial institution does not want to take 100% of the risk, because otherwise it's just too easy for a business owner to just, wash their hands of it. Next thing you know, you're dealing with attorneys and, having to get out of it. So we want you to have something into the project. Now, our organization, we will take, additional collateral. So if you have free real estate that you own unencumbered, but you don't have maybe cash to put into the deal, we'll take that collateral. But keep in mind, if we're taking the collateral, we will go after the collateral if the loan does not get repaid. I mean, that's our security. So instead of having the money put down up front, you're providing us with additional back support. So, but typically 10 to 15, 20% down on the project is what we're going to look for with regards to the lending. We do want to see that there's some secondary source of repayment. That's where either the collateral comes in, or we might ask you, hey, will somebody else guarantee the loan for you? Whether it be a parent, a sibling, somebody else who is involved with you and will be willing to vouch and put their name on a document stating that if you're not going to make the payments, that they're willing to step up and do that for you, at least even in the short term. So, again, we have just a little bit more flexibility. I mean, there's so many different scenarios that we could run through, but I guess what I'd like you to leave with is, start with your banks, the bank that you're currently with, great place. If not, you got a great bank with FNB. Start with them. If they can't do it, don't say, okay, now I'm done. Then come to us. Think of us as, that secondary look. Somebody who might be a little bit more flexible, willing to work with a credit score that's a little bit lower, willing to work with investment real estate as opposed to having the cash. And we'll see what we can do for you. Yes?
I have a real quick question for you on that note. As far as, so in my case, I'm trying to decide of I'm looking to rent space to grow. However, in the event I would decide to buy something, usually the interest rate is higher, correct? If it's not your home that you're buying, if it's like a second location.
Yeah, business loans rates typically are higher than residential mortgage rates.
Okay, so you're speaking just of like a business loan, not like a property loan?
Well, when I say business loan could be a short-term term loan for equipment. It could be a working capital loan for paying payroll and things like that. Or it could be, the purchase of a real estate that's going to be your property that you're going to be in. So any of those are all real business loans.
Okay, and so any type of loan, whether it be for a property or equipment or whatever, you prefer to have something down, like a down payment, even if it's just equipment? Okay.
Yes, ma'am.
For you financial people in banks, what's that required that you give money to nonprofit organizations? They're not huge amounts. They might be, I don't know, $4,000, for different things. What is that called?
Are you referring to EITC?
Excuse me?
Are you referring to EITC credits or to money that the bank
Not-
gives the
not
nonprofits?
credits, they're money that banks give out to your community organization, your nonprofit and everything. I think it's some kind of requirement that
CRA
banks give
credits,
out.
maybe you're referring to CRA
It could be
credits.
CRA based on the location. Each bank does have their own community development bucket of money, essentially. Bigger banks have bigger buckets. To be honest with you, so an M&T or a PNC would probably have more to give than, I shouldn't name names, but we'll say smaller banks. I don't want to name competitive banks. But yeah, each bank does have that, and there's typically a percentage of their revenue that they'll allocate that money at the beginning of the year.
Do you have any?
We have a bucket.
Okay.
We have a bucket. I'm not sure how many zeros are still attached to that bucket.
I'm just finding out for the nonprofits.
Yes, we do. Well, typically most banks will give, again, the larger banks will give more. Smaller banks will give to those organizations that bank with them, obviously, because of the partnership.
We bank with you.
Well, then we can talk.
NAACP, we bank with you?
So that's, yeah, typically that's how it works. We get requests from nonprofits all the time, quite frankly. So it's based on the size of our current budget or what you would need, things of that nature. But yes, banks do get money.
How about you over here with community lending? You have that also?
No, we do not. So we actually are a recipient of a lot of the banks.
Oh.
So
You go to them.
they provide the money to us and we lend it out to the businesses
Okay, I got you.
they're not able to do. So, but we don't have a pool of cash that we just have available. But we do work a lot with nonprofits because the SBA is not able to provide guarantees for nonprofit organizations. So a lot of times it's a little bit harder for nonprofits to get loans from traditional banks because they can't get that guarantee as well.
But I'm interested in, it's a new nonprofit, it's just starting, it's going to help children, you know?
Right.
You look bad if you turn down something that's going to help children.
You could go out and solicit for-profit businesses to donate to your organization, and they can take a credit on their taxes. There's a program through DCED that they can get involved with.
Okay, I'll talk to you later.
Yes, sir.
This question is for Mr. Forrest.
Yes, sir.
So I got my realtor hat on now. Is there a minimum loan that your bank does as far as mortgages are concerned?
Minimum?
Minimum, because I had a few clients they had to do portfolio loans because what they wanted to buy was under the criteria of certain banks that I've dealt with. I've dealt with Wells Fargo, a couple of institutions, and they had a cap. They also didn't do 2 or 3Ks. There's a lot that don't do that as well.
Right.
The case of your bank.
There's no minimum. Again, bigger banks maybe have larger minimums to start with, but no, there's no minimum with our bank as far as that's concerned.
I'm staying on that, as far as minimum so there's a difference then for small business loan versus a micro business loan. So if somebody wanted to come in and they're just asking for maybe a couple $1,000s, is that something that First National would entertain, or is that more, I'm assuming that's more on the community financial institution side?
That's a loaded question. It depends, honestly. There really truly is no minimum. It may end up being a credit card versus a loan if it's small enough, to be honest with you. If you need funding of $500, maybe a credit card would make more sense than the loan. Community First Fund could be a partner as well. But no, there really is not a minimum amount. In his case, you mentioned real estate. I can't imagine real estate being too low, but we'll talk to you about any amount. Quite frankly, you come in with an amount, you probably need more than that. So we'll have that discussion too. If you need 500, you probably need 5,000, and we'll talk to you about why that would be. So we'll talk about the whole picture and partner with you about not just what you think you need, but what you probably actually need.
What's more in terms of people that's on fixed income, guaranteed money. There's not a lot of properties out here at a certain price for this particular market, and I was just wondering because we may have to come to.
That's fine.
And if you could, Ken, the micro lending piece, as far as offering the services through Community First Fund, how you all do that for smaller companies that are looking for those smaller buckets of money and try to help them out.
Yeah, so I mean, we also have a program. I mean, it's we call them micro loans. They're loans that are $50,000 and less. But we still are going to look at the 5 Cs of credit. We're going to look at that for every transaction we do. But again, when it comes to having a smaller dollar amount, say it's 10, 15,000 in order to get something going, it might not make sense from a cost standpoint or from a timing standpoint for us to go and file mortgages or to file blanket UCCs against the business assets. So, oftentimes when those really small startup type loans, we might be willing to just do those as an unsecured loan. Now, if we're going to do that, then, the character portion of the 5 Cs comes more into play. We're not going to do that for somebody who has a 520 credit score. They're going to need to show that they've had the ability to repay other, loans that they've had, student loans, auto loans, keep their, utility bills paid on time and so forth. But we can work through those. It typically is a little bit less cumbersome of an application process, usually turned around a little bit faster to get that approval to you. And then, of course, if we're not going to deal with any of the collateral, not needing to file mortgages, not needing to get title insurance involved, we can get the loan closed a lot faster as well. So those are just some things that, again, yeah.
Restate the 5 Cs. I heard you say that, and then also read the 5 Cs.
Yeah, Well, I'll tell you, we all have different, I mean, so typically, like, cash flow is what I would consider the highest and most important of the 5 Cs. You mentioned character kind of, but that's sort of tied right up there as well. And then the character is coming into play talking about your credit score, your history, your background, and that we perceive that you're a good business that you should be investing in. Collateral is one of the C's, so that's kind of provides us with a secondary source of repayment. So if for some reason the loan's not paid, what's giving us a way to get out of not losing the loan that we provided. Conditions, so that's kind of the terms that are in place. Is it a 5-year loan because you're purchasing, a vehicle or some equipment, as opposed to, we'll do a 20-year loan if you're purchasing some real estate, as well as being able to, pinpoint who the guarantors are in the deal, things along those lines kind of fall in their conditions category. And then really capacity, and I don't know if you disagree with the 5 that I've listed, but capacity, and that's kind of where, what's your equity position, what's your ability to, if something doesn't go right for your company, what's your fallback position to be able to carry forward and keep your company going.
Yeah, that's basically it too. It's close for what we would do too. Capital would be another, but capital would essentially be, as you mentioned, kind of the cash. You're going to come in with cash. So we say capacity versus cash flow. It's the same thing, but the ability to repay. So essentially, those are the 5. But when we take a look at any loan, we essentially overlay all 5 of those, and if we can mitigate any risk or explain away each of those 5 buckets, we have a better chance of getting the loan done. So when you're actually thinking about applying, you want to do the same thing. Take a look at each of those 5 buckets and put yourself in those buckets and kind of explain yourself, explain your business. So if it's capacity, which would be the ability to repay, and I mentioned this gentleman here about the income minus the expenses and what's left, that's capacity. That's the ability to repay our loan. So make sure that if you want a loan for $200,000, you've got enough income left with your business and personally to pay that back. So you kind of want to underwrite, so to speak, the loan yourself if you're coming to us for it, because as I mentioned, you get that one chance. You can't unring the bell, so come to us with a full package. You can address each of those 5 C's up front. It makes it that much easier, likelier to get the loan, I should say.
This is for you. So this micro loan that they use, Stephen, that micro loan, can you do a construction loan? Do you guys serve construction loans as well?
Yes. Yeah, so if it's construction, like say you're renovating an existing building or something like that, we can have draws in there so that it gets paid out to the contractor, so you're not paying all the interest up front, you're paying on what you're utilizing, so we can work.
Well, I like the draw system. I've dealt with a couple clients with 2 or 3K. It keeps everyone honest.
Yes, ma'am.
Back to the banking people. Isn't there something when you consider these, let's say, giving out money, that you consider what somebody's potential income could be? Like, if I win the Heisman Trophy, it's likely that I'm going to, get hired and have additional money, and I want to start this restaurant. So, what your potential income could be, is that a consideration in your 5 C's?
Yeah, that would be part of the capacity, the ability to repay. Typically banks and even the Community First Fund, we typically like to look backward as opposed to looking forward. It's tougher if you don't have a business yet, you're starting up, but we'll first look back. If there's nothing to look back to, then we have nothing but to look forward. But then we'll take a look at what you're projecting. Is it realistic? Conditions being one of those factors, is it realistic? You're saying you're going to make $1 million, and everyone else that does what you do makes $10,000. So we take all that stuff into consideration, quite frankly. That's part of the whole big picture when we evaluate the credit.
So what about those people that don't have they're starting now and they don't have a real robust business plan when they're coming in as far as matching up for financials? Are there additional obstacles or things that you all tell them that they need to work on outside of the credit and collateral that you request for people when they come in?
I would tell them to talk to Linda, actually, about
Okay.
putting together a good business plan. What we always say for a business loan, and this really goes for almost any underwriter that's going to look at this loan, they want to know what's wrong with the loan and what's wrong with your business and why they're not going to do it, and then work in reverse. Where you as a business owner are going to come in and say, this is why it's going to succeed, I'm going to win the Heisman, I'm going to make this much. That's great, but why is your business going to fail? I'm not saying that's the case, but that's the way that the bank underwriter is going to look at it. What's wrong with it and what are the weaknesses is the way we look at it. If you can come in and list 10 weaknesses to your business or your venture, but then you're going to mitigate that with strengths, then we know you've done your homework. Because it's easy to come in and say you're going to make X, Y, Z, but if you're going to say I want to start a restaurant, but there are 15 restaurants around me and 12 of them failed in the last 3 years, then I know you've done your homework. So you kind of want to start in reverse from a bank standpoint. Tell me what's wrong, not that I'm going to say no, but if you find it before I do, then I know you've done your homework.
So that's number 10 on your things of zero talent, being prepared. So part of that is your business information that you're presenting to these financial institutions when you come in, to be able to specifically speak about your business and why you are requiring funding for your business. You got a question? Yes.
I think this would be a question for Julie. I'm curious about like HR issues and how to learn about that. I think obviously there's a lot of things you can and can't say to employees or do, or there's just so many rules and I don't even know where to begin with that. So is there any resources as far as that is concerned?
We do have resources.
Okay.
Again, I mean, if you can just contact our office or call that 833-OPTION-0, and that way we can talk more in depth, and then we can get you that information. But yes, we do have all those resources. Okay, you're welcome.
Go ahead.
This question is for Dan. Looking at starting up a company but don't have any income yet or revenue to the company, at what point is it important for me to look at the basics of an accounting system, like a QuickBooks Online? Like when do you think is a good time to look at that? And then second to that, when should I look at accrual versus a cash account?
Well, that second one's there, interesting. Well, I would say right pretty soon, because if you're starting your business, what do you want to do? You want to give somebody an invoice, right? And so you better have a system ready for that. And, it's good to have a separate bank account. And, yes, we've moved to like QuickBooks Online or QuickBooks Desktop, but I mean, QuickBooks is really out there and you can see where the whole, where it's all going. It's all going to be electronic. So QuickBooks Online is a good thing to probably go with and get started with. But you need an accounting system as soon as you start making transactions, really. Even if you really want to capture those expenses before you start your business, because those can be legitimate expenses that you can either deduct or capitalize and then deduct. So it's important to have that right from the beginning. Because what you don't want is 6 months down the road say, oh, now I think I need to figure this out. Well, you've got a big mess.
So don't start with a spreadsheet and then move on to QuickBooks.
Well,
You could start.
Yeah,
It depends how complicated it is.
if you only have one invoice a month, okay, and a couple of expenses. I don't know. I don't want to pick on your landscape company, but I think you work also, right, full time. So maybe you have a little something on the side. You may not need it right away. You could do a spreadsheet, but.
And then at what point do you think is a good revenue threshold to move to accrual if you're not already on?
Well, I don't know that I have clients who have $10 million that are cash based. I mean, I don't know if everybody knows what she's talking about here, but if you're a cash basis taxpayer, that means you're only paying tax and having expenses cash that you actually receive, expenses that you actually pay. So you're cash basis. So as opposed to accrual, let's say I do a big job and it's $30,000 and I bill somebody for $30,000. And that was in 2018. And I give them an invoice. They don't pay me until 2019. So on my 2018 taxes, if I'm accrual, I'm going to recognize that $30,000 but if I'm cash basis, I don't recognize it until I actually receive it. Well, hey, I'd rather recognize that when I actually receive it and don't have to pay the tax on it when I don't have the money. But there's a lot of, it's more complicated than that, but.
So you purchasing that software, is that a write-off for taxes? Computer?
Oh, definitely. You know, if you buy a computer for your business, if you get QuickBooks Online, if you buy any software, or, you know, all of that kind of stuff.
Yeah, you need to invest in yourself, because a lot of people, they walk around with cell phones to try to do everything on, and it's hard to fill out forms, especially forms that are financial forms or applications, getting in contact with your clients, and just doing typical setup of your business. Once you have that kind of setup, your invoicing and your purchasing, then you can move to your cell phone and make it easier, or to a tablet. But I would definitely say invest in a computer of some sort. So Andrew isn't here today for insurance, but we do have some people that deal with insurance a lot. Can we talk about that process here the last 15 minutes or so, as far as obtaining insurance for your business and what that actually entails? Because I know some people that they may not own a home and then ask their insurance provider to, but just we can walk kind of through that step of identifying insurance, like general liability, workers' compensation.
So my recommendation is for everybody, when they are going to set up their business, they do need a core group of advisors. One, you should have an attorney. And I'm not just saying that out of self-interest, but in the long run, an attorney is going to save you money. Two, you should have an accountant. And you should be talking to your accountant quite frequently, hopefully much more frequently than your attorney. Three, you want a banking relationship. So that when you have a place you can go when you need money, or you have questions about processing credit cards and that, you have a place you can go. Fourth, you want a relationship with an insurance agent. My personal preference, and what I recommend to my clients, is they go out and they find somebody who's an insurance broker, not a dedicated agent. So dedicated agent's going to, let's use Nationwide for example. A dedicated agent from Nationwide is only going to offer you policies offered by Nationwide. A broker, on the other hand, might offer you a policy from Nationwide for general liability. If you have vehicles, he might offer you your auto insurance policy through Erie. There might be a specialized insurance that you might need through some other carrier, but they're going to shop those policies around to various carriers to figure out who's going to get you the best coverage for the best price. And they're going to bring that back to you. And that's why my preference is go through a broker. And at a minimum, you're going to want a general liability policy, I think, because if somebody sues you for a general liability cause of action, that general liability policy is going to kick in, and that policy is going to pay for the attorney to represent you, and that policy will pay for any liability that you might have up to the policy limits. So oftentimes your policy limits are going to be about $1 million. If you go to the bank for a loan or something, and if they say, hey, we need insurance on it, if you're going in for a property loan, if you're going to go rent a piece of property, the landlord's going to require you to have insurance on the property. Once you start getting employees, you're going to have workers' comp insurance. What you pay for that is going to depend on your revenue, your payroll, the industry you're in, how many employees, what's your history. If you don't have workers' comp insurance, you are breaking the law. When I first started practicing law, I was doing workers' comp defense. I've seen the Department of Labor and Industry pursue people for criminal charges for not having workers' comp insurance. One case was down in Lancaster where it was a roofing company who classified everybody as an independent contractor. But everybody showed up to this guy's house every morning. He told them what jobs to go to, what products to use, provide them most of the tools and everything. That is not an independent contractor. That is an employee. Unfortunately, one of the guys fell off the roof, broke his back, and is in a wheelchair. Department of Labor and Industry, and he did not have any workers' comp insurance because everybody was an independent contractor at his point. Labor and Industry went after this guy and pursued him criminally. And so having those policies in place to protect you. Had a client who is a specialty HVAC contractor. And a couple years ago, when the Franklin Institute down in Philadelphia was being remodeled and expanded, he went in there and helped out. They installed a new HVAC system. He goes in there and he balances it out so it works more efficiently. They go in before the project's done. They test it because that's a smart thing to do. Had some problems. They worked through them and everything. And this was a chilled water system, so there's water in pipes flowing around. I kid you not. They turned it off. The storage tanks overflowed, and it flooded out the Titanic exhibit. Ironic. There were some lawsuits that got filed out of that project. My guy got dragged into it. His policies did not cover him, so he had to pay out of pocket for us to represent him. Generally, you can find an insurance policy to cover everything out there. Bye.
Do any of your respective organizations offer mentoring or know of any other organizations or agencies that offer mentoring?
Linda, that's a great question for you.
Linda's a mentor.
As it turns out, there's about one of us in every county that's funded by the Small Business Development Centers, and then SCORE has a huge network, probably 30 or 40 volunteers in every county. The other thing is look for people that are in your industry. They could be friends and family. I mean, people in your industry are willing to talk, especially if they've been successful or experienced a big loss. My biggest source of information in starting my business was calling businesses outside the area. So someone did mention Subway earlier, but back in the day, we were the 10th store at Subway and a very long time ago. But I called Subways in like Arkansas and California, which, on my rotary phone where you pay long distance, no one knows what I'm talking about now. But we spent like $70 calling these owners, and we ended up, getting some really good information we would not have gotten from the franchisor that was trying to sell us stuff.
What is SCORE?
SCORE is another volunteer organization. So if you Google Susquehanna SCORE, we serve York and Lancaster. I'm a SCORE volunteer as well. There's a chapter that serves Lebanon and Lancaster. So volunteers of retired and working people that help small businesses. The problem with setting up a business is there's a myriad of details. We covered like a third of them or a quarter of them today, and you're responsible for all of them. So not knowing that you did something wrong isn't an excuse. So, you really want to have everyone on your team because you're liable. Okay.
You can find those links on our website for both the SBDC and SCORE.
Thank you.
Okay.
SCORE used to be right here.
I think SCORE is doing their counseling now at the Front Street Chamber office. They also do
Yeah, it's
counseling.
at Creedy.
Like at Creedy, and then also somewhere in Carlisle at the Dorado Business Center. So Front Street, maybe 2 and 11. But
Definitely, Mr. Lawson knows this. You can come by. I'm available.
Charlie does some mentoring, right? He's very generous with his time.
I'm a good referral source. How about that? But you can always come by and ask questions about your business, or I'll try to align you with somebody in your industry. Know a little bit about the construction industry as far as just some things that are happening in the city. And I'm also in charge of our tax abatement program. So the city has a tax abatement program where you revitalize properties. They will abate the taxes versus on that revitalization, depending on if it's a substantial, revitalization project. So that applies for new construction, commercial, mixed use, anything of that nature. So I think as we get towards the end here, are there any other burning questions? Yes, ma'am.
I do have one. Well, if you start a business here and then say you want to take it abroad, are there any types of laws that you have to go through, or can you just do it?
What do you mean taking it abroad?
Like say I want to start a business here and then I want to take it to Panama.
You'd have to
Is
look
this
at
I'm sorry. Is it an e-business like online? Or
No, it's like I want to start a nonprofit.
You have to look at what Panama requires.
So you have.
Even in the United States, so let's say you wanted to start a nonprofit here in Pennsylvania, and it goes well, 5 years down the road, you want to expand to Maryland. You're going to have to register your business in Maryland as well. Doesn't mean you have to set up a new business down there, but you have to register your business in every state where you're operating. If you wanted to go to a different country, you'd have to see what the requirements are in that specific country. And some are going to be a lot easier to deal with than others.
DCED, our organization, has an international business office who can assist you with all that kind of stuff. So they can actually research the laws and the requirements in that other, in that other country where you're looking to place your business, and they can help you out with that whole process.
And I appreciate everybody coming out today. And thank you.